By the end of that winter, I could count a stack of 20s faster than I could feel my own pulse. I was 28, a teller at a sprawling regional bank called Casterly Union, posted behind a counter that never seemed to stop humming. The lobby doors kept opening, the line kept rebuilding, and our branch manager, Dana, kept giving us the same strained smile that meant trouble wrapped in lipstick. "We need all hands," she said one early morning, standing beside the service desk with a clipboard she never actually used. "Applications are weak. Training is behind. Corporate wants numbers. I need overtime volunteers." Need was the favorite word in that building. Customers needed cashier checks. Business owners needed wire approvals. Elderly clients needed someone patient enough to explain why their grandson absolutely did not need to be added to every account he glanced at. Dana needed loyalty. Corporate needed miracles. And I needed money. My father had fallen in his apartment hallway and landed badly enough to trade independence for hospital rails and physical therapy. The bills came in neat white envelopes with savage little numbers inside. Every ring of my phone felt expensive. So when Dana pulled me aside near the vault and said, "You help me through this crunch, and the overtime is double pay. I will make sure of it," I said yes, before my better judgment finished stretching awake. It was not noble. It was arithmetic. I worked 2 additional 10-hour shifts each week for 2 weeks straight. The lobby was a parade of urgency. I opened accounts for tired couples, fixed debit card disputes, balanced drawers, and handled the kind of customer impatience that had learned to wear business casual. One man slapped his pen on my counter because his cashier's check took 7 extra minutes. A woman tried to sweet-talk me into bypassing a hold on a suspicious deposit. An older widower whispered that his niece wanted him to sign papers he did not understand. I told him, kindly and clearly, never to sign anything in a hurry, never to add anyone to his deed without independent advice, and never to confuse family pressure with legal necessity. He thanked me as if I had handed him gold. Meanwhile, managers vanished like stage magicians. Every shift had an assigned supervisor because tellers needed approvals for transactions above set limits, exception holds, cash overrides, MIN, and a dozen other controls the bank claimed were sacred. Yet half the time, when I needed a code or a signature, I stood there smiling at customers while scanning an empty platform office. The managers were supposedly working remote hours, which was an interesting trick for a job that required them to physically verify things in a physical bank. One afternoon, I had 3 customers waiting for manager authorization and no manager in sight. I found Wes, one of the assistant managers, coming in from the parking lot with sunglasses on and a smoothie in hand. "You are on shift," I said. "I am logged in," he replied, as though the keyboard in his condo could inspect cash. That lodged in my head. Banking runs on policies, but survival in banking runs on details. I had a habit of noticing them. Which manager initials appeared on approval slips? Which time blocks on the staffing sheet somehow overlapped with suspiciously empty offices? Which employees were asked to do verbal favors instead of written assignments? So I saved texts. I took screenshots of the shift calendar on the scheduling portal. I forwarded my own overtime confirmations to my personal email because desperation makes you practical in a hurry. When payday arrived, I opened my biweekly statement in the break room with a kind of exhausted hope that felt too fragile to breathe on. No overtime. Not 1 extra hour. I checked again, then once more, as if numbers might grow a conscience when stared at hard enough. Dana walked in carrying yogurt and confidence. "Everything good?" I looked up. "My overtime is missing." Her expression did not crack. It only tightened around the edges. "Talk to HR. Payroll may still be catching up." That was the moment I knew I was either being dismissed or delayed, and banks have always preferred one when they can get away with the other. I folded the pay statement carefully and slipped it into my bag. If they wanted to treat this like a clerical error, fine. I was about to become very interested in paperwork. The next workday, I went to HR with a folder, a headache, and exactly enough self-control to remain employable for one more hour. Marnie from Human Resources had the sort of voice people use when they want to seem reasonable while setting your shoes on fire. She motioned for me to sit, glanced at my pay statement, and gave it a quick smile that never reached her eyes. "There is no approved double overtime arrangement on file," she said. "Dana told me there was." Marnie folded her hands. "No one in our department authorized that. Bonus hours were not cleared with HR." Bonus hours? I nearly laughed. It was such a decorative phrase for theft. "I work the shifts," I said. "They are on the schedule." "That may be," she replied, "but compensation must follow formal approval." That was when something inside me stood up, dusted itself off, and put on heels. A tired person argues. A cornered person starts collecting records. "I have the texts asking me to cover," I said. "I have copies of the schedules. I have customer wait logs showing teller shortages and missing manager approvals during assigned coverage windows. Would you like those now or after I ask payroll whether the Fair Labor Standards rules changed overnight?" Marnie blinked. I did not raise my voice. I did not need to. Calm frightens slippery people because it suggests preparation. She asked me to send what I had. So I did. And while I was at it, I made a timeline for myself. Date, shift. Manager assigned. Manager absent. Transactions delayed. Overtime promised. Overtime unpaid. It looked less like a complaint and more like a systems failure wearing a name tag. Then I noticed something even uglier. On 2 of my overtime shifts, manager approvals were logged under supervisor credentials during windows when those supervisors were not physically in the branch. That was not merely lazy staffing. That was a control issue. In a bank, internal controls are the locks on the doors. If approvals are being handled without proper presence, oversight, or authentication, regulators do not call it messy, they call it risk. I knew enough from annual training to understand what sat beneath the jargon. Teller overrides existed to prevent fraud, money laundering shortcuts, false balancing, coerced withdrawals, and unauthorized access. There were rules about dual control, documentation, and duty segregation because banks do not survive on trust alone. They survive on auditable proof. So while Marnie tried to reduce the matter to a misunderstanding, I filed an internal wage dispute through the employee ethics portal. Not because I believed the portal had morals, but because portals have timestamps. I attached screenshots, shift rosters, and notes on the missing manager coverage. Then I added one line I knew they would hate. Repeated absence of assigned supervisory staff during approval, dependent cash operations may have created unmonitored compliance exceptions. That sentence moved faster than any prayer. By later that afternoon, Dana called me into her office. Her office was mostly glass, which I always found funny for a profession that adored opacity. "You escalated this too far," she said. "I asked to be paid for hours I worked." "You are making it sound like a compliance issue." I sat down without asking. "If managers were counting remote hours as on-site while tellers processed transactions requiring physical oversight, what would you call it?" Her lips pressed into a line so thin it could have cut paper. "It is a staffing challenge." "No," I said. "A staffing challenge is being short-handed. This is a control breakdown." She hated that I knew the language. Banks are comfortable when tellers know procedures, not principles. Dana tried charm next, then sympathy, then implied threat. "You are dealing with stress at home?" she said softly. "Maybe you are reading too much into branch pressures." There it was. The old classic. When facts are inconvenient, question the woman carrying them. I stood. My father being in the hospital made me agree to overtime. It did not make me imagine unpaid wages or absent managers. By the next morning, internal audit sent a request for records to our branch. Suddenly, people who had forgotten how to answer messages became astonishingly responsive. Wes stopped strolling in late. Marnie wrote that my wage concern was under active review. Dana smiled at me in public with the expression of someone swallowing nails. And me? I smiled back. Because revenge is pleasant in theory, but documentation is what gets results. Once internal audit stepped in, the branch changed character so quickly it was almost theatrical. People began printing things that should already have existed in organized files. Offices that had been empty for days at a stretch suddenly had chairs occupied by managers furiously clicking through logs, as if speed could substitute for truth. Dana held huddles about professionalism. Wes stopped mentioning how being logged in counted as presence, which was wise because saying something foolish twice turns it into evidence. I kept doing my job. That was the best part. I did not storm around announcing justice. I balanced drawers, greeted clients, and moved money with the serene focus of a woman who knew the floorboards were finally creaking under the right feet. Audit asked for staffing records, approval logs, exception reports, and time entries. Then they started asking for branch access data, badge swipes, alarm disarm records, system login locations. That was when I nearly admired them. A good audit does not argue with a liar. It invites her calendar, her badge, and her timestamps to the table. The story that emerged was not flattering. Assigned managers had logged remote administrative hours during periods when branch policy required on-site supervisory availability. Approval credentials appeared in patterns that suggested shared access or rubber stamp review. Overtime requests had been pushed informally by local management, but compensation approval had not followed the process required by HR and payroll. Everyone had assumed the missing paperwork would stay missing because the people doing the extra work were too tired to fight. They had badly misjudged me. One afternoon, while audit interviews rolled on behind closed doors, an elderly client named Mrs. Veda came to my window clutching a cashier check request and a folder with tabs. She was elegant, sharp-eyed, and irritated by inefficiency, which made me like her immediately. "I need this handled correctly," she said. "My nephew says it is simpler if I just let him manage the property sale proceeds." The word simpler has ruined many women. I reviewed her account notes and kept my voice gentle. Simpler for whom? That made her laugh. She explained that she had sold a rental house after her husband died. Her nephew wanted access to the funds so he could help invest them. I told her what I had told others in different forms. Never add someone to an account for convenience when a limited power of attorney, trust structure, or professional fiduciary review may fit better. Convenience can quietly become ownership. A joint account can expose funds to another person's creditors. A deed transfer can become irreversible. Even kind relatives can become expensive ones. She narrowed her eyes. "You know your business." "I know enough to tell people not to sign away control because someone else sounds confident." She left with her money protected and a referral to the estate attorney her late husband had once trusted. It struck me that the branch loved to market itself as a place of guidance, yet the actual guidance often came from the women behind the counter who had no power titles and very little credit. The audit widened. Regional compliance visited. Then labor relations. Then someone from legal whose shoes cost more than my rent and whose questions were so polished they sounded harmless until you realized every answer tightened a net. They interviewed tellers separately. Several of us confirmed the same pattern: chronic understaffing, verbal promises of enhanced pay, missing supervisors, and pressure to keep lines moving even when approval controls slowed the work. Then payroll corrected my wages. Double rate. In a direct deposit marked adjustment. No apology, of course. Banks do not enjoy using plain language when plain language could later be discoverable. Dana tried one final approach. She caught me near the break room and said, "You could have handled this quietly." I looked at her. I did. Quietly is why you thought it would work. That landed. By the end of the week, customers noticed managers escorting visitors in suits through the branch. The mood turned brittle. People whispered. Schedules were rewritten. Compliance posters appeared as though they had materialized from guilt itself. Then a rumor started drifting between counters and cubicles: temporary operational suspension. I did not repeat it. I did not need to. I had not set out to shut down an office. I had set out to get paid. The rest was what happened when a badly run branch met its own paper trail. The announcement came sometime in the early morning, delivered in the crisp tone corporations use when a building is on fire, but they would prefer you call it a strategic pause. Casterly Union was suspending operations at our branch pending review of control practices, staffing compliance, and employee compensation procedures. Temporarily, they said. That word sat in the lobby like a badly tailored suit. Everyone knew what it meant. Customers were redirected to nearby offices. Account files were transferred. A security contractor appeared near the entrance with the solemn posture of a man who had absolutely heard better stories than ours. The office did not close because of one angry teller. It closed because the systems above me had spent too long confusing pressure with permission. Dana was removed from the branch before noon. Wes vanished into what employees call a special project and what common sense calls a hallway to the exit. Marnie from HR sent a carefully worded update that my wage dispute had been resolved, as though the wider collapse was weather no one had predicted. I should have felt triumphant. I did. A little. I am not made of linen. But mostly I felt clear. For weeks I had been carrying two weights at once: my father's medical crisis and the insult of being told that my labor, once given, could be redefined after the fact. That insult was older than banking and bigger than me. It lived anywhere women were praised for stepping up and penalized for expecting the agreement to survive the emergency. My father was moved from the hospital to a rehab floor around that time. He looked tired but sharper each day, his stubbornness returning like a favorite coat. "You look different," he told me during one visit. "I shut down a bank branch." He stared. I smiled. Occupationally, not with fire. That earned a laugh, then a cough, then another laugh. I told him the cleaned-up version. Missing overtime, empty management desks, compliance review, operational suspension. He listened with the grave attention of a man who had spent years doing contract maintenance work and knew exactly how often corners were cut until someone bled. "Did you get it in writing?" he asked. That was my father in 7 perfect words. "Yes," I said. "Eventually." "Then they were never counting on you knowing the difference." He was right. The difference between a favor and a commitment is usually paper. The difference between access and ownership is paper. The difference between love and leverage in family money fights is often paper too. Deeds, beneficiary forms, signature cards, powers of attorney, fee schedules, side letters. People speak in emotion and operate in documents. I began to understand that what had happened to me at work was not separate from all the stories I saw at my teller station. It was the same pattern in a better blazer. Someone with authority suggested trust should replace formality. Someone under pressure agreed. The bill arrived later. Regional leadership offered temporary transfers to some of us while the branch review continued. I accepted a role at another location across town, one known for stricter procedures and less improvisation masquerading as leadership. Before I left, a few coworkers hugged me near the employee entrance. "You said what all of us were thinking," one of them whispered. "No," I said. "I filed what all of us were living." That distinction mattered. Noise fades, records remain. Dana sent one final email to staff, thanking everyone for resilience during a challenging transition. It was elegant nonsense. She never mentioned the unpaid overtime promises. She never mentioned the ghost managers or the audit trail that dragged everything into daylight. She wrote like a woman leaving a dinner party, not a wreckage site. I deleted it and kept moving. Not long after, Mrs. Veda called the branch to ask for me. She had met with her attorney, set up a trust, and appointed a neutral fiduciary for a temporary property account instead of handing the funds to her nephew. "Turns out caution is cheaper than regret," she told me. I wrote that down on a sticky note and tucked it into my wallet. It belonged there. So did the lesson I paid dearly to learn. When institutions ask for sacrifice without process, they are usually asking you to finance their disorder with your silence. I was done with that, and I was only getting started. At the new branch, things were quieter, tighter, and blessedly harder to fake. Supervisors actually appeared when their schedules claimed they would. Approval overrides required physical verification, dual acknowledgement, and clean notes. Overtime offers came through written channels with compensation codes attached. It was almost romantic. I still worked hard, but now my effort was not being fed into a black hole lined with excuses. My corrected pay covered part of my father's rehab costs, and the rest I managed by becoming irritatingly organized. I negotiated a payment plan with the hospital billing office, challenged duplicate charges, and requested itemized statements instead of swallowing lump sums like they were gospel. Bills, like executives, behave better when asked specific questions. Word of what happened at my old branch traveled farther than I expected. Not publicly. Not in some glittering headline. Banking protects itself too carefully for that. But internally, people talk. A teller from another office messaged me asking how I documented unpaid incentive promises. A universal banker wanted to know whether branch staffing gaps could be reported through ethics channels without retaliation. A woman from operations asked what to review before adding her brother to her home deed after a messy divorce. I answered what I could and pointed the rest toward lawyers, regulators, or written policy. I was not interested in becoming a folk hero. I preferred being useful. My father improved enough to return home with a walker, a sharper sense of humor, and a new respect for grab bars. I moved him into a smaller apartment closer to me and made him sign actual healthcare directives instead of relying on broad family assumptions and crossed fingers. We reviewed beneficiary designations, old insurance papers, and a retirement account he had not looked at in years. I learned that love is tender, but administration keeps the lights on. One evening, while sorting his documents at the kitchen table, he looked over his glasses and said, "You missed your calling." "I work at a bank." "No," he said, "you hunt weak structures." I laughed, though he was not wrong. Around that time, Casterly Union announced a formal closure of the old branch and a reallocation of accounts to nearby sites. Permanent this time. The language cited operational realignment. Of course it did. Corporations would rather swallow a paper shredder than admit a small woman at a teller counter noticed where the floor was rotting. Dana did not contact me again. Wes certainly did not. Marnie remained in HR, which proved that resilience in corporate life is often less about ethics than survival skills. Still, something had shifted. More branches received unannounced control reviews. Over time, approvals were standardized. Manager presence logs tightened. Somewhere in a conference room, people with expensive titles were explaining that controls are not decorative and that payroll promises need signatures before they become bait. Good. They could put that on a mug. As for me, I started taking evening courses in financial compliance and consumer protection. Not because I wanted revenge again, though I admit the taste of it had been satisfying. I wanted range. I wanted language sharper than instinct. I wanted to help people before the trap snapped shut. Customers still came to my window with their ordinary emergencies dressed as simple questions. Should I co-sign? Should I let my son use my account? Can my new husband be added to the deed later? Is this investment guaranteed? Why does this contract fee page look so dense? Each question was a little doorway into a future that could be stable or catastrophic, depending on whether someone paused long enough to read what was being offered. So I became the woman who paused, the woman who asked for the written terms, the woman who smiled politely while someone powerful explained why procedure could be bent this once, and who then answered, with all the sweetness in the world, that rules exist for the same reason locks do. Not because everyone is bad, because enough of them are creative. And because women like me get very dangerous once we stop confusing politeness with surrender.